The market does not have leadership. The two big sectors are contributing on the way down, the banks and the IT sector. And that really is the big problem. And today you saw a big slide and the market moved to 52-week lows. Now you could blame it on the global cues, at least for the first half. But for second half, there was no problem with global cues either. So it was interesting that the market still was at the low point of the day or closer to the low point of the day. For IT, of course, it was the Cognizant guidance that was hurting sentiment. And for banks, it was about the earnings, especially from PNB. So let's talk about some of these stocks which led the market lower. Right on top, IT stocks led by Infosys. That was down about 4%. Largest drag on the market today. The second largest drag was TCS, down 3.5%. And HCL Tech actually was the weakest IT stock, down about 5%. And the biggest sector then, the banking sector, that was also weak, though the problem today was largely restricted to PSU banks because of asset quality issues. So led by PNB, that stock was down 7%. And if you heard the management, it didn't look good. Bank of Baroda was down 5% and State Bank as well was down about close to 3%. Some other nifty losers in today's trade included stocks like Tata Motors, which was down 4%. Dr. Reddy's was down 4%. And Maruti, well, it was the strongest stock just about 2 months back, is now the weakest stock. In terms of stocks which gained, Lupin has seen a bit of a re-rating after numbers. In fact, the stock has rallied some 15 or 16% since its numbers. Sun Pharma was up 2% and NTPC as well was up about 2%. Outside the index, a lot of losers. And what's consistent is that some of these names are really FII favorite names. Motherson Sumi was down 11% post numbers. Strides was down 7% against post numbers. Indiabulls Housing Finance as well was down about 7%. Some more losers in trade today included stocks like Dena Bank, PFC, Suzlon. There was a Just Dial as well. So all in all, a really weak day for the markets.
Thank you, Anuj, for joining in with that. But as